Reports of additional casualties in the South African furniture retail sector in the wake of the African Bank Investment Limited Ellerin Holdings saga have further impounded panic and confusion around the current credit crisis in South Africa, with Lewis and Steinhoff recently announcing significant losses. These ongoing reports have led to areas of misunderstanding in the consumer market, with many being led to believe that the failure of a bank which they owe credit to means that they are no longer obliged to pay back this amount. Well, to discuss this, we are joined by Wikus Olivier at DebtSafe. Good afternoon to you and welcome.
Thanks, Colin.
Right. Tell us about what consumers should know about the collapse of any financial institution that is their creditor.
I think the most important part is that they need to remember that there's still a credit agreement intact. So even though the financial institution is placed under curatorship, like in the case of African Bank, people are still legally liable to pay the credit that they've got there.
They seem to be on a payment holiday because of reasons such as they cannot afford, and of course they are highly indebted, and therefore they feel they want to take a break and handle other matters whilst able, for example, is still sorting its problem out.
Yeah, I think that's the biggest mistake that consumers can make, because it will ultimately influence their credit record, and those listings and data exchanges are still going up to the credit bureaus. So if they think that they can take a payment holiday, it's definitely a grave mistake, and the credit record will be affected if they don't pay.
But what do you make of the current reckless lending of some financial institutions to highly indebted consumers who cannot even afford to pay back, but they continue to give them credit?
Yeah, it's a very sad story actually, and that's why the National Credit Act is there and the amendments on the horizon to sort of take hold of these reckless credit granting and to put mechanisms in place to deal with this reckless credit, because consumers are over indebted and we can't keep pushing them down.
Well, the issue here is then non-compliance by some of these institutions, because some of them cannot even deserve to be called institutions. They are loan sharks. So then what do you do when you are involved as DebtSafe with a consumer who was actually lended money that he didn't deserve or qualify for?
Borrowing money that you can't afford really puts the consumers in a bad situation, and that's where we as DebtSafe come in. We assist these consumers in terms of the National Credit Act with the process of debt review, where we negotiate with the credit providers on their behalf to get the installments reduced, payment terms extended, which will bring immediate financial relief to the consumers.
But why is there this kind of loophole whereby we have the National Credit Act to mitigate the issue of highly indebted consumers, but then they continue to get money in unscrupulous ways for those who are very hungry to do business? And of course, I just heard recently there's a story that there's an institution which finances some borrowers who have child support grant only as a source of income. Yeah,
that's ridiculous. And I think the days of those type of credit granting is coming to an end quite quickly, and I think credit providers should be aware of what's on the horizon. The rope, as to speak, will be drawn tighter, I'm sure of it.
But right now, ABIL is under curatorship. So where do we strike a balancing act in terms of the interest of the institution, which is under curatorship right now, and the interest on the consumer, like you as DebtSafe are trying to salvage the situation? So is there a balance?
Yeah, it's actually a tricky question, because I mean, where does your priorities lie? We as debt counselors need to put the credit providers in a preferable spot, as well as the consumers, and we need to carry the interest of both parties at heart and find the middle way there. But unfortunately, with the consumers there, we aim to help them, to get them out of that hole. Because African Bank, unfortunately, did not do that in the beginning as they should. Affordability assessments were lacking. And with the new amendments, affordability assessments will be a lot stricter, so people won't be able to get credit as easily as they did in the past.
But are you winning in as far as DebtSafe in trying to help the consumers who are highly indebted?
Yeah, absolutely. We've got a good success rate. Consumers are applying for debt review, more and more of them every month. There's an excess of 10,000 debt review applications countrywide for debt counselling. So the process is working. Credit providers are getting their money out of the process. They get 100% recovery, and consumers are being rehabilitated through an ethical process, and they get rehabilitated into the credit markets.
All right. Thank you very much for talking to us.
Thanks a lot, Colin.
All right. Wikus Olivier is debt counselor at DebtSafe, talking to us about those with financial problems and, of course, wanting to get out. And, of course, DebtSafe is helping them.